Hello and welcome to Commodity Champions. I'm Manisha Gupta. The gold prices continue to glitter as prices surge this year. In March 2023, gold prices in India have hit a record high of over 61,000 rupees per 10 grams. Over the last year, India's gold prices have seen an increase of around 20% as of April 2023. As gold glitters, silver prices too are trading at near one-month highs. So is it a good time to invest in gold? And if so, in what form and what percentage? How long should be your portfolio? Should be a short-term or a long-term goal? And what is the outlook for 2023? Joining me to take all of the discussion forward is Ole Hansen. He's head of commodity strategy at Saxobank. Ole, hi, good to have you. And clearly, gold has outperformed various other asset classes, whether you look at equities, currencies, bonds, securities, even real estate in most of the countries, with gold prices, especially in India, up 20% in last 1 year, and nearly 10% of gains is what we've seen in this year as well. How do you look gold in relation to other asset classes?
I still look at gold quite favorably. We have seen the underlying drivers turning more supportive compared with last year, when we saw this big jump in the dollar and we saw a big strong rally in bond yields. The outlook right now is still is pointing towards an economic slowdown. It's pointing towards a peak rate to emerge within the next few months, and that followed by rate cuts, that in the US, that is, and that would likely continue to underpin the prices, also from the fact that we are seeing some dollar weakness occurring at the same time. Multiple other factors, which I'm sure we're going to discuss in this.
Interest rates is something that everybody is watching out for, and 25 basis point markets believe is factored in that we will see perhaps on 3rd of May. When you talk that when you say that we are nearing peak and we even perhaps could see rate cuts coming in before this year ends, what is your sense on how we're closing this year then in sense of rates?
I think we'll close perhaps with pretty close to where we are right now, because I think the market may be a little bit optimistic in terms of how much, in terms of cut they expect. Right now priced in around 50 basis points following another 0.25% hike, as you talked about. So perhaps around this level we are now, perhaps a 0.25% lower. But I think the main thing is that we're heading towards a peak situation in rates. It can either come about by an economic downturn that forces the Fed to abandon its inflation target, or simply because the outlook for inflation continues to support a reversal in the hikes we've seen in recent years, or during the past year. So peak rates previously and during the past 20 years has every 3 times that happened signaled a strong period for gold, and that's what we're looking for to be repeated.
You spoke about the dollar index as well. Any range that you're putting out on that one for this year?
Come again, sorry, I didn't get the first part.
I said the dollar index as well. Are you putting out any range for this year now?
Not particularly on the dollar. When it comes to gold, we still see it high at a record high by the end of the year.
And what levels? I mean, are you looking at 2100 coming back? As in, is that the high that you're looking at and beyond?
I think if we look at from a longer-term perspective, just look at the world as it is right now. We are seeing a de-dollarization having some kind of impact. We're seeing central banks continue to be strong buyers. We're seeing earning growth in the world's biggest stock market in the US, not showing any signs of a pickup in earnings growth anytime soon. And I think that basically leaves the playing field open to other investments. And with that in mind, and considering the risk of a weaker dollar over the coming periods, I think the long-term prospect for gold is still there. And if you look at the chart zooming out maybe 10, 20 years, the kind of formations that we're seeing having been built in the gold market could indicate that if we do see a new record high, then there could be quite a substantial move higher in the coming years. So with that in mind, I think we maintain a prospect for 2100 easily to be met at some point.
All right. You mentioned about central banks, and yes, last year was a record buying, and this year in the first quarter also the buying has continued. Though, of course, in the month of March, there have been some instances where we've seen some countries, some global banks actually sell gold too. But would you say that this could be yet another year where we would see banks as net buyers of the yellow metal?
For sure, but what's the unknown right now is really how strong that demand is relative to the price, because there might be some price sensitivity. You mentioned gold has reached a record high in rupees. We've seen record highs in other currencies as well, and that potentially could have an impact on how the central bank thinks regarding the price. So quite often in the past we've seen that the market needs to consolidate before we see additional buying. So basically, even if you're a central bank, you just need to get familiar and comfortable with a new higher level. So that may just slow down some of the price action or the buying activity that we see. But generally for the year, I see that demand continue.
Well, also, what's your sense for silver then? And because we've seen support come in for this too, but far away from its all-time highs in the dollar or, for that matter, rupee terms.
Yeah, and that's what continues to attract the investors. Based looking at gold near a record high, but silver well below its record reached more than a decade ago, and that's continued to attract some demand. I think right now we're missing a little bit the third leg in the silver rally, and that is the industrial metal space. I heard in the section just before that we talked about copper, and copper right now is still struggling to find the momentum that the market is looking for. I think until we get that, then silver may struggle a little bit to continue to outperform. But generally, having rallied by 30% during the past month, so far the correction has been very shallow, and that does indicate there are bidders in the market waiting for any setbacks to get involved. So silver looks promising as well as platinum. I think last week we saw quite a substantial narrowing of the discount between gold and platinum.
All right. You mentioned about metal. You talked about copper as well. And yes, we've seen the sell come on every uptick into many of these industrial metals. The markets, while of course are looking at lower inventories, but it is a Chinese demand which is keeping the prices under pressure. What's your sense now for the remaining quarter on where could we be headed with all of these industrial metals?
Well, I think the structural long-term outlook for copper, just looking at the availability of supply and the green transformation, is a story of strength. And we saw that just a couple of weeks ago when copper made an attempt to break higher. It triggered quite an aggressive amount of speculative buying. It basically means that buyers are worried about missing out on the rally when it comes. But the failure to break higher at that point triggered the selling that we're seeing right now, which is taking it back near the lower end of its current range. But longer term, it's difficult not to build a bullish case for copper, looking at both the supply and the demand side. And the same goes for some of the other metals, particularly those involved in the transformation.
So bullish copper, but when you look at the markets right now and how the past 1 week has been, we're looking at multi-week, multi-year highs, multi-year lows rather for many of these metals. Zinc is trading at a 2-year lows. You have steel and iron ore trading at 4- and 5-month lows, multi-week lows, as I said, for aluminum, zinc, and copper and nickel as well. What is it? On one side, of course, the markets will watch out for the US Fed. On the other side, the Chinese demand and perhaps a Chinese stimulus measure. What is it that would excite you within the metal space? What would you buy, and what kind of a risk-reward ratio are you looking at?
I would buy as I mentioned, the green transformation metals, because the electrification of the world only continue to gather momentum, and that basically means that those metals that are involved in that space, there will be nickel, there will be copper, they will continue to attract strong demand. You mentioned iron ore, and iron ore is a very China-centric commodity, 70% going to China, and we're seeing a slowdown in steel production, steel demand. We're also seeing the government stepping up its efforts to quell speculative trading in the contract. So it's been drifting lower at a time where you normally see strong demand, and I think it highlights what's happening right now with the recovery in China. It's not a recovery based on the same drivers as we've seen in the past. It's not going to be as commodity heavy as we've seen in the past. So that basically means it's not steel and concrete that you should be looking at. You shouldn't be looking at some of the more finer metals. And again, I'll point out something like copper, because the green transformation is also ongoing in China.
Absolutely, and that is where you have the best of the fundamentals as well, but buying into gold, silver and platinum as well. Ole, thank you so much for joining us with your sense on all of those metals, especially precious metals as well, where you are quite bullish going forward from here. But with that, we'll head into a short break, but don't go anywhere. When we come back, we'll talk about more gold some more. We'll tell you on what, how much and where should you have gold in your portfolio.